And for more on the fortunes of the other movers and shakers, I spoke to Martin Lakos from Macquarie Private Wealth. Martin Lakos, after yesterday's interest rate hiccup, the glass seems to be half full for investors. What's topped them up?
It does look like some of the commentary, Tiki, from the Reserve Bank is holding the market up reasonably well and accepting of the move. Now, obviously, the bank sector, the global bank sector situation has now been, those pressures have been alleviated from late last year. But the focus on the domestic economy from that commentary is really showing that growth in Australia is almost back to trend. Unemployment is steadying up, although we see the numbers the weakest since 1992. They do cite house prices seem to be stabilising, and they also do cite that credit growth starting to improve. So although that sounds a bit ordinary, not enough for the Reserve Bank to be acting at this stage, given the global risks seem to be improving. Now, that's been reflected in our market again today with a much more steadier performance, with the market edging higher, and also don't forget the big focus on the reporting season at the moment.
Well, just one of the companies reporting I see is Ansell. How did the numbers look there?
You look pretty much a result in line with expectations. We look sort of at the breakdown. The sexual wellness part of the business did particularly well with increased margins, but the industrial and medical side was a bit weaker than expected, which was a bit of a surprise. The result was boosted a little bit by tax and one-off issues, but they continue to give solid guidance, which is exactly what the market wants to see. So that share price has been pretty solid all day.
Now, Australand Property Group has delivered its full-year result. What would investors have been focusing on there?
Yeah, Tiki, another result pretty much in line with expectations, with residential doing okay. Commercial was down 8%, but that was well within line of expectations for the market also. And the outlook statement, not too bad. And that stock, again, was up about 3 or 4 cents through the day's trade.
And tomorrow, of course, we've got the Telstra profit announcement. Now, how important will talk about dividend be and capital management?
Well, look, we think it unlikely they're going to make any huge announcements on capital management. There might be some commentary, but it's more likely post the full agreement on NBN, they'll start coming out with some notifications to shareholders in regards to capital management. And on our numbers, it does look like there's enough free cash flow for them to look at share buybacks into 2013. In fact, it may well be there'll be share buybacks and possibly special dividends in addition to the current dividends into 2014. And that may well be topped up by some of the NBN cash flow. But the company's certainly doing well enough to support those capital management issues. Certainly that would be proven even more so if we saw a modest reduction in capital expenditure down to about 13% of sales as against current levels of 14%. But that stock's rallied really hard, and that's certainly part and parcel of seeing anticipation of lower interest rates and a re-rating of the yield, that the very attractive yield that Telstra is currently supplying, now at 8.1% fully franked.
Oh, we'll see what happens. Big day tomorrow. Telstra and Rio, I think, results. Martin Lakos, thank you very much for joining us.
Always a pleasure. Thanks, Tiki.